Welcome guys, it is me Deko Mohammed. Today topic is trading profit and loss account for the beginners. I know most of you are asking a simple question, so this class is mostly for the beginners, for those who are coming for the first time. You also please subscribe, like and share for you to engage and learn more on this lesson. So welcome. Here on the board I'm having a simple illustration of which I like to illustrate. We are told the following information relates to early traders. We have the details, we have the debit and the credit. We have stock 10,000, bank 3,500, purchases 15,000, sales 28,000, returns 800 on the debit, 1,100 on the credit. We have rent 580 on the credit, insurance 950 on the debit. You have the creditor 450 on the credit, carriage inward 1,200 on the debit. We have discount 300, then 1620. Total amount 31,750, 31,750. Additional information: closing stock was valued at 2,500, carriage outward 1,200. Required trading profit and loss account for the period ended 31st December 2014. So this question I have already solved it here on the board, so we want to illustrate one by one. The first thing you need to do, you start with the title. The title of the business is Early Traders. Then what do you want to prepare? You want to prepare trading profit and loss account. Then the date or the period, for the period ended 31st December 2014. So you begin with the title. The title is Early Traders, Trading Profit and Loss Account for the period ended 31st December 2014. The first thing, we begin with the sales. Sales. The sales normally has a credit side. So on the credit side, sales is 28,000. We less return inward. The sales, you less the return inward, all the sale return. Whatever they have returned after you make a sales, the returns you need to subtract. So the return in this question was 800. So we take 28,000, we subtract 800, you get 27,200. Then we less the cost of sales. Remember, cost of sales consists of the opening stock. We add the purchase, we add the carriage inward, then we less the purchase return, we also less the closing stock. That's when we can get the cost of sales. So cost of sales, we begin with the opening stock. The opening stock was 10,000. Purchase was 15,000. From purchase you add carriage inward of 1,200. Then you less the return outward of 1,100. So when you less the return outward, you get 15,100. Then you add that opening stock to this 15,100, you get 25,100. This 25,100 is the cost of good available for sale, COGAS. From this, you less the closing stock. Remember, the closing stock was 25,000. When you less 25,100 from 25,000, you will get 22,600. 22,600 is the cost of sales. So this cost of sales we compare with our net sale, which was 27,200. So this 27,200, we less it from 22,600. You get 4,600. That becomes the gross. That becomes the gross profit. It becomes the gross profit. So once we arrive at the gross profit, we add other incomes. Here in the question, we only have one income, which was discount received, which was 1620. Remember, all incomes have a credit side, while all expenses have a debit side. The only income that had a credit side was discount received, which was 1620. There it is. Then from this, we less the expenses. The expenses we had was rent, 580. We had insurance, 950. The rent here, remember the rent was having a credit. So, having a credit balance, it is an income, not an expenses. If it was having a debit, it could have been an expenses. Since this rent was having a credit side, it is an income. So we need to add back it to the gross profit and the discount received. So rent was having a credit side, that's why it is an income. So we go for insurance, 950, discount allowed 300, carriage outward 1200. Then after you add these three, you less it from 6800. The balancing figure is our net profit carried down, which was 4350. Then it balanced at 6800. This question is very simple. What you need to understand is that the trading profit and loss account has two sides. We have the trading account, profit and loss account. So the trading account, we need to start with the sales, we less the return inward. That will give us the net sale. From the net sale, you need to compare with the cost of sales. The cost of sales consists of opening stock, purchase, carriage inward, purchase return, and the closing stock. Once you get the cost of sales, you compare with the net sale. If the net sale is more than the cost of sale, we have a gross profit. Then from the gross profit, you add other incomes. From other incomes, you less the expenses, then you get the net profit. It is me, Deko Mohammed. It was a pleasure having you. Till next time. Thank you.